Absolute Wealth. Real investors, real results.
Hey everybody, this is John Carter from Absolute Wealth. Let's go ahead and take a look at the markets. And so the overall theme of last week was that yes, the news is bad. Yes, there's no reason the market should be going higher. And yes, Europe's a catastrophe. But the price action was bullish. And what I mean by that is that, the news that came out here was worse than the news that came out here, and yet the market was going higher. So the market is obviously very, very adept at grabbing this bad news and digesting it and being able to move forward from there. So at this point, I'm actually looking for just kind of a continuation of this move. You've seen here, you saw the sell-off, you saw the sell-off. These are all symmetrical moves, and then you had the rally, and then you had the rally, and then I'm looking for the rally. So I am looking for the S&Ps to kind of get up here to like the 1385 level, right around in that level. And I do expect that we can actually get a rally over the next couple of weeks. So I'd continue to pull any pullbacks as a buying opportunity. And then we'll see. I think we're going to reach an inflection point about the second week of August, and then we'll see from there. But in the short term, it's a trade, and it's worth doing. The strong stocks in this market continue to do well. Walmart continues to head higher. Today it took a little bit of a break. Target, consumer stock here, has been doing great. It's at new 52-week highs. And I think it's important to note that housing stocks here have been doing phenomenal. Okay, that's Toll Brothers. If you look at Home Depot here, the stock's been doing phenomenal. And by phenomenal, I mean, if we look at a bigger picture here, Home Depot has gone from $30 since October up to $50. And it's really showing, the strength of what's going on out there. I mean, the news is filled with, doom and gloom about what's going on. But the reality of it is that right now, the housing market is bouncing. The economy is resilient. And again, I want to emphasize that I'm talking about, now. Everybody always looks for things to fall apart and for things to end, but these things cycle all the time. Okay, and America handles those cycles really, really well. At some point, we're going to get in overhead, and the proverbial manure is going to hit the fan, but we're not there yet. Okay, so in the meantime, we do what we can. We play the action that's in front of us. If we take a look at gold, gold here just continues to be on autopilot, doing nothing. So can you buy it here? Yes. Is there a reason to? Not yet. I mean, just kind of be patient and just kind of let it unfold. And if we go ahead and take a look at bonds, you can see here that money still wants to be safe and still wants to flow into bonds. They were down a little bit today. But this is a unique situation where money is flowing into U.S. stocks, essentially U.S. assets, U.S. real estate. Why? Because everybody's scared of what's going on in Europe. Okay, so at this point in time, again, going back to the S&Ps, just continue to look as pullbacks as buying opportunities. I think this will be good for a couple more weeks, and then things could get fairly interesting. All right, hope that helps. You guys have a great rest of the trading day, and we'll see you at the next update.